Hello and welcome to a Smaulgld update on gold. Today we're going to talk about, does consumer sentiment influence the gold price? So the gold price and consumer sentiment, we're going to look at some charts here, or actually one chart on the University of Michigan's consumer sentiment data, and compare that to the price of gold over the past 10 years since 2008. Now the price of gold has correlated inversely to consumer sentiment the past 10 years. When consumer sentiment falls, as measured by the University of Michigan's Consumer Sentiment Index, the price of gold has risen. And conversely, when consumer sentiment has risen, the price of gold has generally fallen. Now, let's take a look. Now, many investors, they look at a lot of data points when they try to project the gold price. We're going to throw the consumer sentiment one into the mix and show you a chart that shows that there is a decent correlation. People look at interest rates, real interest rates, the gold supply and demand, political uncertainty. Some people look at the yen-dollar relationship, central bank buying by China and Russia. They look at the open interest on COMEX. And we're also going to see gold ETF flows also have somewhat of a correlation to the gold price. And other people just give up altogether on trying to project the gold price and resign themselves that the gold price is just subject to the whims of manipulators. But there are some correlations. Let's take a look today at the correlation of consumer sentiment as measured by the University of Michigan and the gold price. Now, the highest gold prices since 2008 were at times when the University of Michigan's consumer sentiment was at its lowest. So let's take a look here. Consumer sentiment hit a low of 55.8 in August 2011, and that month the average gold price hit a high of $1,755.81 an ounce, according to Kitco. So in this period here, where you have very low consumer sentiment, you have a higher gold price. And then, of course, as the consumer sentiment remained low here, the gold price rose. Now, as consumer sentiment rose from its low here, as it rose up towards almost 100, the gold price fell, and you can see they're coming closer to parity. The way I created this chart was I put the consumer sentiment index on a base 10. So instead of it being 55.8, it's 550.8. Instead of it being 98.2, it's 980.2. But that just to give you the correlation to the gold price. Otherwise, you have a line down here and you really couldn't see much of a difference. But the numbers are consistent, and there is a correlation between consumer sentiment when it's low, at least the last 10 years, the price of gold has risen. And as the consumer sentiment rose, here you see in when it hit a 10-year high in December 2016, the gold price fell down from its post-Brexit highs and down to 1151.40. So it's something to take a look at and continue to follow. I would think that unless the consumer, if there is a correlation, we're not going to see skyrocketing gold prices unless we see some jolt to the consumer sentiment index. And right now, you know, there's your Trump euphoria right there that drove the, if you look here, you got Brexit, and then down went the gold price. And then as consumer sentiment went up at the beginning of the year, gold price also went up a bit, but we're plateauing here. We're very close. The two lines are not very far apart. This is when they were the most far apart in 2011. Now, let's also look at the gold ETF demand. Now, as money flows into this, represents U.S. mostly institutional investors, but there are other international gold ETFs represented in this chart. This big one here is GLD. But again, you can see from 2008, gold price rising, gold ETF money flowing into those gold ETF rose, and then you can see here as the price declines, the withdrawals begin, and you see the price goes down as the withdrawals go down. And then in 2016, the beginning of the year, big increase in gold ETF demand, and you can see the price also went up. And then we had that drop, and then there were the withdrawals. I'm not saying the withdrawals from the gold ETF cause it, but there is some rough correlation. You can see the price is moving up, it's moving down, it's moving up, it's moving down, all in general rough correlation with the gold ETF flows. Thank you very much for listening. If you enjoyed this report, please consider donating to Smaulgld via PayPal, via Bitcoin, via Litecoin at the links below. Also consider purchasing your precious metals through Smaulgld through the links below. You can compare pricing and shipping at BGSC, Golden Eagle Coins, ST Bullion, and Money Metals Exchange. You can check out the banners and links on the Smaulgld site, and you pay no more, no less than if you visited those sites directly, and Smaulgld does get a small commission. Not investment advice to buy gold or silver, but if you are going to do so, please consider doing so through the Smaulgld site. And also, if you're interested in buying or trading Bitcoin, Ethereum, or Litecoin, you can do so through Coinbase. And there's an offer where if you open a Coinbase account, you get $10 worth of free Bitcoin when you buy $100 worth of Bitcoin, and Smaulgld also gets $10 worth of free Bitcoin. So again, not investment advice that you even open an account or trade Bitcoin, Litecoin, or Ethereum, but if you're going to do so, please consider checking out that offer. Thank you very much.